All right, so as I mentioned on my nightly recap, we'll talk a little bit about the HF1 sell pattern. Okay, so once again, these patterns are all based on price action and how the bars are formed, as well as we do look at volume as well. So it's a combination of a pattern and a volume number. Okay, so I wanted to show you that when a pattern is set up, sometimes it can take on a shorter pattern. I could maybe get a pattern that sets up over a 10-minute time frame. As you can see, this particular pattern that I took today as a short, this took and these are 4-hour bars, by the way. 4-hour bars took almost 20 hours, right? Almost a full day here to actually set up and get a HF1 sell pattern. Okay, and so once the pattern is set up, and once again, I can get multiple levels, right? So I may get levels that are further out. I may get levels that are further in. Of course, if I want to go for a bigger move, I have to be willing to possibly hold on to it longer. If I'm looking for a shorter move, as you've seen with my scalping, which I like to do with the stocks, I'm going to be looking at a much shorter move. So we put a little bit more shares on, with the idea that we have a high probability of hitting these targets. Okay, and I also know that more than likely I'm not, if I'm scalping, I'm more than likely not have to carry it very long because the target is a lot shorter. Hopefully that makes sense. So anyway, this is an HF1 sell pattern, one of my favorites. We get them for buy, we get them for shorts, but it took, like I said, almost a full day for this to set up before I was actually ready to come in and trade the gold. Okay, now, so the first part of it obviously is deciding what you want to trade. Obviously gold's been pretty active, so I knew that I wanted to trade gold. So the next thing I do is I wait for a pattern to develop, and in this case it finally did. It was an HF1 short pattern. Okay, then that gives me a very specific entry. So the HF1 pattern, once it sets up, will tell me exactly where to sell. In this case, it was down over here where this yellow line is, because what that says is that it's also looking at the momentum, okay, coming into this point. Okay, so let's go back to physics a little bit, all right? And this is just kind of a simple way of explaining it, what basically Einstein does. But if you've, well, obviously one of the laws is that if an object is set in motion, it typically continues in that direction until opposite and equal force, okay, counteracts it. Well, the other thing that a lot of people don't realize and they don't look at is the fact that when a market builds up a certain amount of, let's call it speed in this case, okay, price change or speed, okay, it's very similar to, you've seen where they go to a scene of the accident and they look at the skid mark. Well, you can look at the skid mark and you see them measuring the skid mark because that gives you an indication how fast the vehicle was traveling, okay, it looks at the speed. So, but you can also reverse that and say, okay, if I get up to a certain speed, if I hit my brakes, I know how far that vehicle is going to travel, assuming, you know, you have normal conditions, right? So normal conditions would be, you know, no ice on the road, no rain on the road, normal tires, those types of things. So you can get pretty accurate in terms of knowing exactly how far that car is going to skid. It's the same thing when we're looking at Einstein. And so when the pattern sets up and then we see this last bit of momentum coming here, this tells me that when I hit my entry point, it gives me a very high probability of how much further this is going to go, okay? And the probabilities always are over 70%. Okay? And so in this case, it said you're going to have a $5 move down based on this particular time frame. So that's why I ended up getting out today, because it said I have a high probability, over 70%, that once it hits this yellow line, this horizontal line, that I have over 70% probability that it's going to continue on to this line. All right? And that's the beauty of what I do. That's why it's a very simplistic way of trading. Now, of course, all of this is programmed into the computer, so it's not like you have to look at this and run your calculations. All the calculations I've already done. Everything is built in. So once a pattern is set up, it flags me, and it also tells me what my levels are going to be based on that particular time frame, because I'm always looking at multiple time frames, right? And that's why you see a lot of times you may see, you know, a second and a third and a fourth level. You know, in this case, this was a short, but if it's stock, you're going to see multiple levels on the upside, right? So when I'm trading a gold, I'm always going for just the first target. Now, a lot of times I have multiple targets, right? But because I know that gold's a slow mover, I only want to go for the first target. If you're in an indice, yes, you can probably go for more targets. But why should you? Typically, that first target, you make plenty of money off of that first target. Now, stocks are going to be a little bit different. We really like, you know, to get more of a move. We like to see the 20, 30, 40 cents, dollar moves, all right? So I really try to go as far as I can with the levels without having to hold on to it for an extended period of time, unless I really like it and I see further out targets. Kind of like I did tonight with some of the stocks. I'll hold it overnight, see if we can hit those further out targets. You don't have to do that. It's a little bit more risky. Don't suggest, if you're new, to do that. Go for the shorter targets, get in and out, hit it, and get out. But the beauty of this whole process is not only is it a very simplistic, because I only have really two things I'm looking at when I'm trading a stock. I'm sorry, when I'm trading like an indice or commodity futures. But when I'm trading a stock, the only other element I look at is the scan that I run that sets me up for the stocks that are displaying patterns that not only have a lot of volume coming into it. So we know there's interest in the stock, but also they're providing me with the patterns. And that's how I narrow down the stocks that I want to trade. And that's why I hit a lot of them, why I'm profitable in a lot of my stocks, is because this method is tried and true. It's been around for 35, 36 years now. And it's all based on, in this case, physics, right? But these patterns are based off of what I call behavioral patterns. I talked about behavioral patterns way back in the 80s. And if you read an article that I actually wrote back into the 80s, it was a published article talking about the markets and how they act kind of like a hologram. But the markets do kind of act like a hologram. But I don't really want to get into all of that. To simplify it, I'm really only looking at two parameters. When I'm looking at an indice or a commodity, basically, is the pattern there? Yes. And what are my targets? Stocks, I'm adding one other element, and that is I'm looking at the scans. And then everything else falls into place, and that's pretty much it. So it's a very simplistic way of trading, but it also requires that you work with it, all right? Be patient, have confidence in the levels, and that's one of the things that you have to develop is whatever tool you're using, you have to have the confidence in that it's going to hold up. I see it all the time where people come in, they use all these different moving averages and stochastics and all that kind of stuff, but do you really have confidence in something that's always changing? I personally can't. Now, maybe there are some people that know how to make money with all that, but think about how stressful that is. You know, are you using a 21-day moving average, or should you have used a 25-day moving average, or should you have used a 10-day moving average? They're always, it's like a moving target. You can't catch it. The nice thing about these patterns is they are static. They do not change. And not only that, is they are what I call universal. So this HF1 pattern is going to develop in gold the same way it develops in the index and the same way it does in the stock. So it's the exact same behavioral pattern. And I too talked about behavioral patterns and how behaviors under certain conditions, which is reflected in the charts, right? In the way the charts look and the characteristics of the chart can be predictable. People's behavior can be predictable under certain situations. And I found 4 that I really like, and that's why I stick with those. You don't need a ton of them. You can stick with 1, you can stick with 4, it's up to you. But the key is that you have to believe in whatever you're trading with. And after 35 years, this thing has continued to perform as well 35 years ago as it has today. So I'm certainly a believer in the way that I trade, and it's a lot simpler. And when it's simple, it's easier to stick with. You don't have that stress. And you don't have to make, the less decisions you have to make, the better it is. That's what I always say. Don't be listening to the news. Don't have CNBC on. Don't be listening to all that stuff. Don't be listening to all these analysts. You know, everything is going to be displayed in price. All right? Stick with price. That's what you need. If you want to throw in other stuff, you want to throw in fundamentals and everything like that, you can certainly do that, but you don't need it, all right, to be successful. All right? You want to keep the amount of decisions down to a minimum. All right? You don't want to have to look at, 10 different things. If you look at 1 or 2 things, that's a lot easier to look at and get a clearer picture of what's going to happen than if you're looking at 5 different things. So very seldom do all 5 things line up for you to make a trade. All right? So I wanted to get a little bit more into that. That's basically how it works. All the patterns are different. We got an HF2, 3, 4, and then we have the pairing pattern. They're all a little bit different formations, but depending on the time frame, like I said, some can take a full day to form. Shorter can be 10, 15, 20 minutes. So it really depends. All right, I hope that makes a little bit more sense. If you have any questions, best way to contact me is via my website, innovative trading strategies.com. Check out my other videos on my YouTube channel. And until the next video, y'all take care and good luck in your trading.